Hey guys, Mike here. So today we're going to answer all your questions and comments. One of my favorite videos to do during the week, of course. And so feel free to participate. We got plenty of questions from you guys about NVIDIA and Tesla and alternative ways to invest in these two stocks, which I'll show you as well. Another question about Inphase. Another question about Fed rate cuts and a few others after that. So I'll try to get to all these for you. Feel free to participate as usual. And let's get right into the first one, which is kind of a long one here. Do you think Tesla is in for a short-term correction and has been trading in a compression triangle, which is, you can tell this was done like right before this crazy move up in 4 days. I'm actually going to skip down, and we'll go over Tesla, but I'm going to skip down to NVIDIA where it says it has an interesting head and shoulders pattern developing. Base to the top distance have extended from current price. It would drop down between like $94 to $100, exactly where the large gap in May was left. Beyond that, next large gap down coincides with a 200 moving average. How do you see these two tickers behaving? And we'll go into Tesla, and I'll go into it even in more detail in tomorrow's video when we set the week up. But as you can see right here, obviously, when you put the volume profile up, like I talked about, you can see this thing before you even really hitting kind of major resistance, right around 258 to 260 right there. And I said, what was it, 2 days ago? I said it's hard to predict this kind of stuff when it comes to Tesla because it gets on these squeezes, gamma squeezes, short squeezes, whatever you want to call them. You know, it depends on if people are covering their shorts, it depends on the option market, all this good stuff. And so, again, it continued to squeeze. It finally slowed down a little bit on Friday, which is a decent thing, and pulled back a little bit. But again, you're looking at an area, you know, right there where you see there is, you know, a bearish order block right there. We'll see if that's going to be a problem or not, or it's going to break right through it, come back down, retest, make it into a bullish breaker. That's what we got to find out on that one. And so, again, I mean, that's straight up. Eventually, do you have to consolidate? Sure, but you look over to the left and you can see one that looks just like this, right? I mean, when Tesla gets on these rip and roars and big money starts flowing into it, then it's an interesting one. But I mean, again, the first thing that's going to move down is going to be that trend line. If it makes it down that trend line, then yes, you got a chance. But, you know, 36% in that short amount of time is a big move up. Just watch the trend line on this one. And the next question, I'll go over some basically different alternatives to invest in this one. But if we go to NVIDIA, you can see on this one, this is the head and shoulders I assume you're talking about. Let me know if you're watching it in the bottom. If you don't, I mean, it's the ugliest head and shoulders I've ever seen in my life. But, you know, TradingView even picked it up a little bit. And you can see where he's talking about between 95 and 100 would be the target. And again, that's the ugliest head and shoulders I've ever seen. Most head and shoulders do not play out at all. Especially down to where you actually think the target will be. But again, it's good to be aware of it, so at least I put it on there for you. So now I'm going to get rid of it and stuff. And with this one, you know, one good thing about this one, which I'll talk about in Sunday's video, is, you know, the fact that it is consolidating, and that's actually a good thing if you're a bull in NVIDIA. But again, letting the moving averages try to catch up, right? And so it's letting that 50 try to catch up. I'm going to put the 100 on here for you so you can see that. But trying to let these moving averages catch up. That is not a bad thing. And when you consolidate, if you can break out above that, all of a sudden you got support down below to retest instead of just cutting through like a hot knife through butter. Okay, so just kind of keep that in mind. You can see, in order for that head and shoulders to play out, I mean, it would be a pretty big drop. You know, 31% if it actually played out. And again, we got 22% over here, so not saying it can't. And I mean, it hadn't touched us 200 in what seems like forever, of course. But, you know, and it does have plenty of decent little bitty support levels, I guess I should say, coming down. And of course, you see the gaps and stuff on there. But, you know, looking at this one from another perspective, you can see if you pull the volume profile up, which I'll talk about a little bit later on, somebody has a question about this, you can clearly see the tree limbs, right? The tree limbs are the support. Okay, some of them are very slim support, that's for sure, no doubt. But you can see as this thing, if it started to break down, where you start hitting and getting bounces and then breaking down through and bounces. So the volume profile is pretty clear on this right here. And I'll tell you what settings I use later on in this video. But you can also see something very important to watch on NVIDIA is going to be what happens when the RSI breaks down below this moving averages and starts to move down. You can see that's usually when you end up getting sell-offs. It almost tried to happen here and end up bouncing right there. But you combine that with a bearish MACD cross, and that was a fake out MACD cross. But when you see that there, if you have that, then you go, oh, okay, no doubt. Especially if the histogram starts appearing below that zero line on the MACD, then, oh, yeah, we definitely are heading down for sure and probably will hit 111. And if that breaks, then around 99 to 100, right? So just kind of keep the momentum stuff in play, but sitting there stuck in a range is not a bad thing for NVIDIA at this point in time. And if you're getting out of this, guys, please hit that like and subscribe button. Really appreciate it. It helps push out the video to others. Now, that leads us to the next question of, hey, Mike, besides Tesla and NVIDIA common stock, are there cheaper ways to invest in these stocks? One is options for sure, and NVIDIA is way cheaper now than it was. Tesla's obviously more expensive after the run up. But the other one, if you want to do it, and again, I don't recommend these unless you know what the heck you're doing, because you can get absolutely wrecked. TSLA is a 2x leverage bull ETF, and you can see, I mean, up 111% in a very short amount of time on this thing. So again, and you know, what was that, 60% in the last like week or something? So, you know, and then NVDL is the 2x long for NVIDIA. And so again, if you were sitting in it right here when it started to come down, you got wiped out about 30% in a very short amount of time, like 4 days. And so you really got to know what you're doing when it comes to these and be confident in it, because you can get wrecked. But again, if you were riding it up over 200% in a very short amount of time, less than like 2 months. And so, you know, that's two other ways plus options. There are other kind of leverage ETFs on these out there. I think these are two probably the most popular. Please put in the comments if you know of any others you like to play and stuff. And there's also the bearish ones. Okay, there's also the flip side of what these do. I'm just not going to show those to you. But again, the flip side is there as well. So just be careful, understand what you're doing before you get into these, okay? Next one here says, what are the odds the Fed actually cutting rates and there not being a recession? That's always a great question. Well, looking at the track record is not good. And if you look at this is the Fed funds rate, and then the grayed out boxes are recessions, right? And you can see after every rate cut, there was a recession. Now, of course, I think it was over here in 1997 or something. They did some little cut right here, and they said, oh, look, there was no recession. And they're right. Right, we were in the dot-com bubble era. There was no recession right there. But every other time you can just see it. I mean, they're either running us up into a recession, cutting right before the recession. So usually something's broken. All right. Now, what really makes this time different and can make it different is this right here. And it is those total money market funds and the wealth and everything they built up. You see how it just keeps pushing up? But the one thing you got to remember, and I don't think gets talked about enough, is the fact there's one thing that keeps this economy propped up. It's that right there. But also remember, the housing market. And what do you mean by that, Mike? I mean, two things. One is, and you're probably one of these people just like I am, you're sitting in a very low mortgage. The mortgage is way cheaper than you could ever rent at any place, right? But it's also a backup plan. I'll show you the refinancing chart where it's going up. Think about it. In your right mind, who's going to go from a 2% mortgage voluntarily to a 7% mortgage unless there's something going wrong, right? But it's a backup plan. It's like having a savings account starting there, because the banks are desperate to give it to you. They're like, please refinance. We need something here. And so they'll definitely give it to you, right? And so when you look at it, you know, that right there is the saving grace people. It's a savings account they didn't know they had. And you're thinking, so, well, yeah, what about the people who don't make a lot of money and stuff? And here's what might surprise you, a statistic. But even people who make below $50,000, 45% of them own homes, okay? And their homes have gone up in value as well. So keep that in mind. And what is the other thing that I've been talking about this for, what, 2.5 years now? That's not happening. If you're not buying homes, guess what you're not doing? Because it's the largest purchase you ever make. You're not putting a huge down payment on anything. So that huge down payment is just sitting in a savings account. Maybe it's in the stock market. Maybe it's somewhere. But it ain't paying for a house. All right, so that's what you also have to keep in mind. And so it's a twofold thing. People are upset about the housing market they can't buy, but it's also making sure they're not putting this huge down payment down, which of course is keeping cash in their house or in their savings account or wherever it is, the stock market or wherever they're doing with it. And then for us who do own homes, you got this backup plan where you're like, man, I'm sitting on all this equity. I can sit there and tap it anytime, line of credit, whatever it is, right? Or HELOC, whatever you want to do. I mean, and so you got to, you know, keep that in mind. That's keeping things afloat, along with obviously a lot of people weren't talking. And really, it's not even the people making $50,000 below. It's more or less people, especially a lot of money, sitting there drawing 5% on just a bunch of money sitting on the sidelines, right? And so that's kind of stuff. That's what's throwing that's the X factor. That's throwing a wrench in everything, trying to figure this stuff out. Okay, because if it wasn't for that, obviously it would be normal time. So let me know what you think about that there in the bottom. Of course, I always let people disagree and tend to learn from people who disagree. If they're right and bring their facts, I like to see it, and I'll show it to you. Somebody put something in the comments that makes sense. All right. Now, next one here says from Dr. Marcus, what in God's name is going on with Inphase? Is this a buy the dip opportunity or catching a falling knife? I mean, when you look at it, I'll show you some things that might have pushed this one down. But what Inphase is, for those who don't know, it's a high flyer alternative energy stock is what you're looking at here. And it moves. I mean, it moves up and down, as you can see, very fast, okay, when it does get rolling in either direction. So you can see these are huge moves up for this one. And when you look, it's kind of just been in this range right there, as you can see when you kind of just pull out and look at it. But again, 33% drop in 22 days, right? But it came down this shaded area I've had on here going back to October 2023, really. And you can see it started to somewhat bounce right there. It's always been a good spot for it. Again, it's below that trend line right there. And when we look at this, you put moving averages below all moving averages. Moving averages don't even really matter for this stock, to be honest with you, because a lot of people like to sell calls and puts on this thing because it gives you a decent amount of premium stuff. So you can see there is a bullish order block down there, okay, a couple of them. So we'll see if those kick in, help this thing get back going. But it's a momentum stock, right? And so what stopped the momentum could have been a couple things like this. One, class action lawsuit filed against it on June 20th for some stuff, which I'm not even going to get into. Feel free to read about it. It's right there. And you can look this up yourself. The other one is you look at the gains as far as like what we're looking at for as earnings, right? And when we zoom in here, you can see, right, market participants will be closely following the financial results of Inphase Energy. The company expected to report EPS of 0.51, down 65% from the prior year quarter. At the same time, our most recent consensus estimate is projecting a revenue of $309 billion, reflecting a 56% fall from the equivalent quarter last year. So, that kind of news coming out, around almost, I think that equates to when it actually started to fall and stuff. It's not a great thing, trying to push this one down. But again, when you look at it, it's still in the same range. It's been in this range right here going back to, basically November, October last year. And so is it going to bounce? If it does, it's usually a pretty good bounce. So what you really want to look for, because this is a momentum stock, okay, you're not buying this on fundamentals, is this right here. You can pull up any momentum indicator you want to. You can pull up all three of them, right? You got stochastic, you got the RSI, and then you got the MACD. When you see the big moves up, it's not an earnings thing. Really, you're looking at the MACD at least coming across that zero line. RSI is crossing the moving average above the 50 at least. And then you want a bullish cross on your stochastic RSI above 50 would be even better. And then when you go over here, you see the exact same thing. Even though this was earnings, you can see they still lined up where you had a bullish MACD cross, and then right after that, you had it come across the zero line. The RSI crosses that moving average, across the 50, and then you already have the bullish stochastic RSI cross. Same thing right here on the last move up. And so again, you see where we're at right now. And so we hadn't got the bullish MACD cross at all. The RSI is not crossed on the RSI. The RSI has not crossed that moving average, and the stochastic has not really turned up yet. So just keep an eye on that. Now, right here, this one says, what settings do you use for your volume profile indicator? Somebody put me onto this a while back, and what he's talking about is VR, VP, and trading view. Visible range, volume profile, and I just did my settings, and one of the members who reached out to me, and because I used to have bigger bars on here, and when you go over here and click on it and stuff, you can see what it really gives you. On to the right, what I'm pointing out there is where like support, resistance, that kind of stuff, where the most volume's coming in at and everything. And so I just use 50 on the row size and value area volume of 100. If you even ask me why, I totally forgot. It's been so long now, but it seems to work for me, so I just kept doing it. And so that's what I like to use. But play around with it and see what works best for you. Okay, hopefully that helps. Now, last one here from Doug says, I have a question for the weekend. In many of the stocks, there's a huge spike down at 4 a.m. pre-market. What the heck is going on with that? I suspect it is the big boys trading marbles. Am I close? And it's not just that, and I'm going to show it to you. But yeah, I mean, it's going to begin at 4 a.m., right? So you get pre-market coming in, and people start really, believe it, around the world, start buying up stocks, selling stocks. But it's not that it does a drop or anything. When you look at a futures chart, and if you've never looked at one, just pull it up. You can pull it up on anything to look at this. You have big moves going on in the AM, not just at 4 o'clock, but I'm talking about 3, 2, 6 a.m., all this good stuff. You see these moves happening? So you'll have anywhere from like 0.2 to 0.5% moves going on in pre-market, up and down, up and down. That's why sometimes you'll see like a big drop at open if you have like a big push up in pre-market, and all of a sudden it opens, it just dumps, just gives it all back. And yeah, I mean, a lot of it's big boys, but a lot of it is just traders around the world. I mean, there's so many more traders now than there used to be playing with this stuff. And you can see that right there. That's a pretty good dump right there around 4:30. And, that's a pretty good rise right there going into 4 o'clock, right? So, again, you get this stuff, and it goes vice versa, right? Like if you see a big dump right before open, sometimes you'll see, like it's a 0.82% dump, you'll see a big shot going straight up, right? As soon as we open the market, you go, what just happened? But a lot of people don't look at pre-market, they don't look at futures charts and everything, and it kind of gives you the full picture. So when you're trading on regular trading hours, you're just seeing just a partial of what the true picture actually is. And when I say there's a lot more traders and stuff going around the world, I mean, you can see right here, stock volume explodes outside of regular trading hours, right? And you can look at 2022 going up, you can go to 2020 going up. And so it's just a lot more people doing this in pre-market. I know some people don't even trade regular hours, they trade pre-market and that's all they do, right? But you gotta be pretty skilled to do it because the volume is lower. And so you can get caught. But I mean, some of the biggest moves, the only moves you see all day, really good setups are in pre-market. So again, that's what's going on there. And yes, a lot of the big institutions, they do a lot of their stuff in pre-market and after hours, all that good stuff. So that's where it happens. So hopefully that helps out. Hopefully that answers all your questions. Feel free to come back with some stuff in the comments on some of those as well. Always love reading the comments and everything. Again, hope everybody had a safe 4th of July on Thursday and stuff. Mine turned out really well. We really enjoyed it. A lot of fireworks and all that good stuff, and sitting in the pool all day and playing around with the kids. So it was fun. It felt very weird to be off on Thursday because all day Friday I was just like, I had to keep reminding myself it's not Saturday, it's Friday. So you still have to work. So anyway, hope you guys got something out of it. Please hit that like and subscribe button. Feel free to put more questions down in the comments, and I'll try to get to them in next weekend's video. If I don't, I'll push it off to the next weekend. So anyway, hope you got something out of it, and I'll see you guys tomorrow to set up the week, and it's going to be a good one because we're finally getting back into earnings season. So have a good one, guys.